Hello friends, welcome to our next schedule. In this schedule we are going to learn about the investments and different types of investments and what are the various ways we can invest and we are going to learn all these different revenue models in the stock market in this schedule. Let's going into the topic. Different types of investment options available in the market, but before going into this we have to ask ourselves a basic question: why should one invest in his life? The answer is, let's say example, every year we have an inflation increasing or inflation rates changes, so the value of the products or the value of what we invest now or what we buy now may increase in the next coming years. And if you want to buy the same product next time, you may have to invest more money for the same product with the same quality, or even the low quality also we have to pay more. This is because happens because of the inflation rate. If someone has a query about that, what is inflation? Inflation is the rate of change of a price of a particular any product is known as an that inflation rate. The difference between the price change is known as inflation rate, and it happens generally in every country. Sorry. So due to that inflation, we have to compulsorily we have to invest to get ourselves protected for the future increase in the prices. We have to protect ourselves, or we have to meet such requirements. We have to invest. For say example, if we take a bikes or something, previous years we have to buy at 50,000. Now we are purchasing at 75,000, 80,000. The difference between the bikes price is even been increased almost to 50%. So our income range is increasing at the same pace? The answer is simply straightly no. So we need to invest, and we need to plan our investments daily, and then only we can survive over the coming years. So that is the major need of the investment. So for that we'll explore different investment options available for us. So as an if we are investing in any stream of any stream, then it is known as an investment only. And so in that we can invest in startups means the companies which are going to which are in the budding stage or at the initial stages. We can invest in such companies, but if we have such good amounts, then we'll invest. But the success ratio depends upon the so many factors. That's our individual choice. We don't dive deep into the startups part of thing. Or we can invest on our existing family business or relatives business or something. That can also we can do. And but the major coming to the other revenue is real estate. This is the major and the highest part where ourselves, our Indians choose to invest in nowadays. Also we are going to invest in the real estates. We know that real estate is subjected to same like stock markets. They are also subjected to market risks of different options. And next coming to the real estate, after that we can go for the fixed deposits, which is provided by the by the banks. and post office schemes are also provided by the Indian Postal Services. We have RDs, that is nothing but recurring deposits. It's just like systematic investment plans, like we'll invest monthly some around 500 rupees starting, or maybe 5000. We'll start investing in such schemes. We have insurances, I mean ULIPs, unit linked insurance policies, or we have a provident fund. Provident fund means we have public provident fund. Any people in India, in any Indian, can open a public provident fund and get the investment, and they can save the amount in that particular account, and they can get the interest. And more important thing is, more public provident fund is the highest investment interest payer as of compared to any banks as of now. And most important one is we can invest in the share market, like IPOs, mutual funds, ETFs, bonds, stocks. All these things are the different revenue models we have available in the stock market. How to choose a different products, how which product is suitable for you, that's we can understand by our risk profiling. Risk profiling means what amount of risk we can take, and such subject that we will learn deeply in the next coming schedules. Don't worry about that. But coming to this is the another different options we are available. But coming to the market, yeah, this is a most annoying thing is, most of the people like invest in the share market because they see quick returns when compared to other investments, like they'll see a very quick appreciation of their capital, and that is the major attraction point of the stock market. And at the same time, I have to warn you that there is the negative side also. The same time we can even lose the same pace, at the same pace we can lose the our investment also. And for that we will see in the later schedules, we will see how to protect ourselves for such losses and everything, that we will see in the later schedules. Yes, this point says, some may say investing in startups also give high returns, but the risk is actually the risk is more compared to share market. Yes, means the startups success ratio is less than 30-20%. So we can see the risk is majorly the very high when compared to share market. Share market is when we can go with a complete good strategies and everything, we can get a good huge returns. But has no offense on stating that startups are a failure things, but startups are also even good, and which is very very important for the backbone of the economy. So keeping all these in mind, we'll explore each and every options in the share market, like IPOs, mutual funds, ETFs and bonds, that equities. This we'll see step by step in the next coming lessons. Thank you.